Patrick, welcome back to Face, buddy. Great to have you. It's amazing how time flies, right?
Hey, yes,
Every,
yes, Dal. It's bonkers. Seriously, I had my alert on my phone. I said, "Oh my goodness, what? It's already time to hook up with Del again." It's like I was surprised. I DM'd you. I said, "Is it today?" And you said,
time. Becomes a little less meaningless when your clock is a market instead of a clock. So, interesting action we have here, Patrick. What's top of mind for you? I'm looking for about 20 and a half in the silver. And I'll tell you, like I've told everyone else, once we get down there and gold works a little lower, I won't talk about the short side of the precious metals market again for at least 2 years. So I'm waiting for this and looking for, great entries sometime this fall.
I'll tell you one thing, and I'll share my screen if you don't mind.
Yeah, I'd appreciate it. Yeah, go ahead, buddy.
The metals are financialized, and they are the gold silver ratio is that chart looks exactly like the
dollar
or the VIX. And if gold or silver are getting sold off, but silver is getting sold off more, and the gold silver ratio starts spiking up, that's telling you, and the VIX is probably, if it confirms that the VIX is going up, if the DXY or the US dollar is getting strength versus let's say the euro, it's hold your breath moment, because that thing could crescendo upwards in a spike and then generate some type of market sell-off. It doesn't have to be that way. Sometimes these spikes, they get subdued, and then after that, it just rolls down. But I'll take you guys are like, we're super short term there, so I'll zoom out. Maybe that'll help nuance the big picture versus the shallower end of the picture.
Okay,
I did this chart.
I like telescopes, man. But I survive with my microscope.
Yes.
Even though I have a telescopic bias, it still is important for me and my followers to be tactical.
You need both. So you need any industry, any team in any type of industry. You need a strategic roadmap. That's where the big picture comes in, and then you need tactical a playbook to be able to navigate that longer term roadmap. So you're not always waiting on the sidelines, suffering a 30% drawdown. You're able to go in and out on the smaller time frames, but always understand where you are in the macro cycle, because that will drastically shift the odds from your shorter term trades, your counter trend plays from panning out. It's like sometimes you think that, silver's, I have a support for silver, let's say at your rising trend line, like I saw whatever, 20 bucks.
Yeah.
But if on the longer term, you're not looking at, and let's say it's above a 7-year moving average, or there's another type of support on the higher time frames, that's going to interfere with that shorter term target, it's dangerous, right? But we could do, I'll do silver after if you want, interactively.
Okay.
But you guys were talking about oil and the impacts of oil on US equities. Here, the best thing you could do, guys, just do a ratio chart. So here I have the 3 greatest moments, or the 3 most important moments in financial histories. I didn't put the 1939 one. So let's say for the last 70 years, every time SPX has rolled over versus energy, crude oil, you had to shift your focus, because now all the narratives of why energy is headwinds for growth stocks, all that stuff, all those narratives kick in, right? And oil's up, inflation's up, purchasing power's down. Then after that, gold, silver, all the commodities, they price in that destruction of purchasing power. So look at this beautiful rising trend line from 1949 all the way to 1969, SPX versus crude oil. Momentum breaks down, huge violent recovery for SPX versus crude oil. But look, after that, you're on the wrong side.
That's the oil embargo. That's the oil embargo, bro.
Right? Sure, whatever narrative, I don't mind.
Yeah.
Seriously, if it wasn't even oil embargo.
But look at the gaps on that one compared to the other two. So that was an embargo move.
Well, yes. Well, the question is, we'll never know.
You weren't even a baby.
Well, yeah, I wasn't even born yet.
You weren't even in a gas line, man.
You did? You went through that?
Yeah.
It's weird because I asked my in-laws and the people who lived in Canada, they didn't have any issues. They don't remember having issues at the gas station in the 70s at all. So Was this an
Yeah.
American thing or worldwide?
Yeah. Well, I lived here, so this is what I saw. Yeah, there were
Wow.
lines, and they were going to they were alternating days you could drive based on, what you
Wow.
had on your plate. Anyway, so here we are again, is what the analog is showing, right?
Well, yes. And here's the 1982 to 2002.
Yeah.
Look at that beautiful bull run. Essentially, this is just telling you capital flows are favoring
Okay.
SPX. But now you got a beautiful breakdown in 99 or 2000 retest, and down she goes below a wall here. Look where we are today. This is a beautiful 2008 run for US equities versus energy. The US stocks did a blow off top. For me, the SPX, US stocks have had the blow off top versus energy in 2020. That's it. That's the blow off top in US stocks. Whether they melt up nominally, adjusted for an inflation proxy, crude oil for energy, it's done. It's like that type of spike here.
Yeah, parabolic. Yeah.
Oh Jesus, that's on the log scale. That's bonkers there. Look, it could recover, but the probabilities right now, and you see here the bear market rally. Look at that, how violently SPX has turned to fall versus crude oil. I don't know, maybe you're a head and shoulders expert, but for me, the important line is 1, 2, 3, 4, 5. That's a 5-point rising trend line. A break of that is significant. And it's just not a break of a trend line. Oh, it's the end of the world. It's the angle of that trend line. It's getting less and less steep, the trend line, right? So if this breaks, Dale, you're probably looking at that 3850 level right here, a horizontal type of line. And after that, well, that's game over. Below that is just headwinds for SPX. And this is the thing. People have to remember the SPX is not just growth stocks. SPX has 11 sectors in it. But at the beginning of all at these switches in bull eras, usually there's one of the sectors that's overweight. So here in 2008, it was probably oil that was overweight in the SPX. And as this went up, the money started rotating out of materials, basic materials, out of oil, energy, and it started going into tech, right? Tech, and all that stuff.
Yeah.
So that always helps. So often people, they want to see the end of the world for the SPX, but it's very hard to kill the SPX. That's a beast with 1,000 heads because it's 500 companies, and it could rotate out the crap, and you just rebalance into the more performing assets, right?
It's a hydra.
It's a hydra. You can't kill the SPX. It's not like, that's why I told those Bitcoin guys, you got to be careful. The Bitcoin could not rotate itself out. if nobody wants Bitcoin anymore, you've got an Enron on your hands.
Go to Ethereum, rotate into Ethereum.
Sure, they go to Ethereum, but it's not an index. So the price of Bitcoin has there's no bottom. The SPX, there's some type of bottom because it could always overweight the other sectors, right? In these in these micro cycles. But what I'm saying is Bitcoin could disappear off the map, and nothing's protecting it from. It's not an index. It's not weighted. It cannot rebalance itself. It's like a canopy stock. Canopy went up and down. It's like an Enron that could go bankrupt. It's one of these things, right? It's not a hydra of 500 heads. The Bitcoin has one head. Ethereum has one head. If nobody wants Cardano anymore, that's it. It's done. It can't survive long term for as well as the Dow can, as well as an index can. That's my.
Well, I thought the market would be a lot lower with how Apple has been getting destroyed, right? And yet it's held up so far pretty good with Apple. They rebalanced Apple before Apple took the hit. And I actually predicted 3 months ago that China would retaliate against us by going after an icon like Apple. And it happened.
You got to look at this, man. This is the Apple chart.
Yeah. When
I zoom out, I'm not particularly worried for Apple. It's above a 3-year moving average. Above my goodness. It did a breakout here. Now it's like, so people, let's short Apple to death. Well, okay, fine. Maybe if you zoom in.
Where's the cloud come in underneath it? Where's the cloud come in?
Look, Apple, you short these things here. I'll show you where the low risk shorts is here. When it starts below the 3-year moving average, below the cloud, then you have a chance. then you're in a downtrend. Maybe a bit, there's probably a better fitting moving average there. But this is still, it still has tailwinds, right? It's not totally destroyed. Maybe, you know what, Apple, my line in the sand would probably be here. If it closes below 139, now you got some type of distribution top there happening. That's
okay,
not
140 is your red line.
Yeah, probably here. If this happens, see, that's a
Yeah.
possible bearish roadmap, right?
Yeah.
But
I like
this is
it.
what happens usually for US equities. Bullish expanding wedges. You've seen these. That's what they do. They love doing that over and over and over.
Like broadening tops.
Yes. So this can probably happen. And after that, it's you got to be very courageous to short US equity, to short US equities. They could hibernate, they could go sideways, but
how much more do you think the dollar has left here? It's been very persistent, you know, relentless. Wow. In fact, what are you thinking here?
Well, the dollar. So essentially, this is the Euro USD pair, right? I try to always nuance it because versus other currencies, it's not looking as good. Look at that. That's versus the Swiss franc. That's not very good.
Right.
So you always got to measure. Okay, well, look at the DXY. I could have overlaid the Euro USD. So here it is. Look, it's in what do you want to say? It's still in an uptrend. It's above the 3-year moving average. It did a blow off top here, but now it's I
like that 108 level you have. That would be the next wall.
Yes, look at this, because historically, 1972, a wall is essentially resistance, support if you're above it, and it's resistance if you're above. Here in 1976, here 81, 86, 89. Here was the top. Let me zoom in for you guys. Look at that top, especially at the top. Once that breaks down, you see, try to get back above a few months in a row, couldn't do it. And so that 108, that was a 2003 rollover. And here, try to get back above 2016. The wick here couldn't even manage, but now look, it's above. So that, well, no, not the 108 there, but the lower levels here, it's above that. So it's stuck in, it's stuck between that range there.
Are you feeling discouragement from people who are silver bulls? I mean, they've been looking for you know, the short squeeze to happen for a few years now. Looked like it could have at that last rally point up at 25 before it turned back down. Are you starting to get that sense? And I'm also getting the sense that for as discouraged people are with the physical market, they're even more so discouraged about the miners, the gold and silver miners.
The miners are just terrible. Seriously, the miners is one of the most terrible investments anybody could do. It's you have to time them precisely like a surgeon, and if you don't do that, you're just gonna feel sick to your stomach. I feel it because I hear it. People have.
Do you own any? Do you own any?
There's a couple of miners I have, but it's like it's nothing. It's like it's very low position size. Like I'm risking less than 0.25% on each of those, and it's a while back there. I had them. They had good charts, but they have massive headwinds because the miners, they track gold versus SPX. Let me do the silver. I'll show you what the miners need, and then silver is super easy, guys. Super easy. Since this breakdown, guys, these walls, you got to respect them. Since the breakdown in 2013, look at this massive top here, massive top. Breakdown 2013, right away, you have to put an alert there because now that $28 or $27, $28, $29 level has become a wall. Years later, guys, that wall is still there. And you stay clear. Look at that. Even here, that's why it halted here, here,
what a memory.
The markets have a definite memory. So silver there's been no reason to be in silver. The only play you had for silver here was this breakout of this base. Once you hit that wall, you run to the hills, and then you wait until the 28 is broken. But what's happening now, because it's a descending angle, this trend line now has become very important. Yes, the final breakout line is 28. But I call this the early breakout line. And if that level here over time, it diminishes. So before it used to be 25.
Sure looked like it was going to go a month ago.
Well, it didn't. I'll put on the quarterly.
You know, leave that for a second. I heard someone calling silver. It was that guy Carter Worth on CNBC. You ever watch him? Saying we have a cup and handle developing, and he was bullish. So we could still have the handle develop here on silver above $20 and then go.
Yes, this is the thing, guys.
Right.
A pattern is only a pattern once it breaks out. Repeat after me, guys. A possible cup and handle is just a possible cup and handle until it breaks out.
Possible.
Of course.
Right.
Look, I'll show you something here.
Because the handle could break off the cup.
Yes, of course. Look at this. I'll show you. This is great, guys. I did this recently. Here.
Uranium.
Yeah, this is Cameco. So people in hindsight, oh, I bought the dip in Cameco. But seriously, until this thing breaks out, you know what this looks like? It looks like a bear flag. It looks like a massive halfway flag. What's to say that this, let's say you're not doing weight of evidence. What's to say that you're not dealing with something like this there? Seriously.
Yeah.
You don't know yet.
Pull back. Yeah.
People always think, oh, I'm buying this. Yes, of course, there's bullish signals. There's a fight.
That's another reason they're ignoring the miners. You know, I'm waiting to buy the miners, I guess, to try and be a surgeon. And it's just been an easy ride being long uranium issues.
Oh, goodness. And that's the thing. If you're not outperforming other instruments class, people should really ask themselves, why am I in this precious metals, the miners, and they're not breaking out yet? They will have their day. But right now, here, look, I have the gold versus SPX ratio here below in the candles. And the orange is the gold and silver's precious metals fund since 1968. So that's actually an index of precious metals, gold and silver. And that kind of, because it's an index, it survives. It's almost like a best case scenario. And look how it tracks the ebbs and flows of the SPX. Look at that. The gold versus SPX is just two major asset classes. It's a rock versus actual companies. That price, that ratio chart, these miners who have supply and demand mechanics, they have energy costs, they have different CEOs, different lands, different sampling rates on the. But why are those miners as an aggregate tracking the gold to SPX ratio? Guys, think this through, because that's telling you that all the fundamental analysis you guys are doing on all these miners is practically useless. Yes, if you really want to do it, but overall, what's really moving the gold and silver miners is gold's capacity to outperform SPX. And you'll see here in the 2000s when the miners went bonkers, and that's the clickbait stuff that allowed these the mining newsletters to try to sell all of these great gains. But look, gold was starting to break out versus SPX. Even here, look what's happening to gold versus SPX, guys. Now, look at that. Yeah. It's not breaking out at all. We had a chance. I've been monitoring this for so long. I've had this thing under my radar. I have the .5. So when gold is going to be worth of half of SPX, this whole rally here from the bottom, I spotted it, I think, and I kept tracking it. I told people, if ever we get a convincing breakout above .5,
yeah,
here's that.
Looks like we need one more low for a 3.
Well, yeah, I think it's getting carved out right now. Seriously, with all the evidence. Look, I'll tell you what's very positive for gold, silver miners, and all that. Uranium and oil are doing great, especially uranium. So
yeah,
it's rare that you won't have a gold and silver bull era. I'm not sure it ever happened with. If uranium, Cameco, and all these things go in a secular bull era, it's almost you have to have a gold, silver, a commodities bull era. They go hand in hand. So right now, with gold and silver, because they're financialized risk on, risk off instruments, they are pricing in the risk of a market sell-off. That's why you have pressure. Eventually, as SPX gets sold, if gold gets sold off, but less, this ratio.
That's what I'm looking for.
This ratio will go up. It will go up. And then when it breaks out, the miners will love it. The miners will love this ratio. They'll love the capital flows. And then you buy your miners here, guys. You have to wait. It's just, another low. I don't know. Yes. Yeah. How low is it going to be? I don't know. You have to wait, guys. This is the thing. While everybody's looking here, I did do bullish roadmaps where it looks like that. And your eyes, you just see that. Oh, I want to buy the low here. Look, it could keep going down, guys. I'm sorry, but look, there's actually a breakdown here. You don't know. That's a valid halfway flag breakdown. So
yeah,
you don't know where that thing's going to end, right? Why be a hero? I don't get it.
Okay.
That was my rant. But I'll tell you,
All right, that's a good rant.
Yeah, I'll show you one thing here. The Swiss franc is the most, out of the major currencies, the Swiss franc is the most powerful US currency. It's stronger. I showed you it's versus the US dollar. The US dollar has been losing versus the Swiss franc forever. If gold, this is gold price in Swiss franc, guys. If gold is able to outperform the Swiss franc, that should be the benchmark for gold. It's not if it could break out versus the US dollar. Because the Swiss franc is a stronger currency than the US dollar, if gold is able to break out versus the Swiss franc, then you have a bull era for precious metals. That's very, very telling. And right now,
what would that take? Breakdown?
You need a breakout here. So this is gold expressed in Swiss franc. If you want a bull era for gold, you want gold price in Swiss franc to go like this, right? Up, up. Oh, yeah. You want that. It was on live support last month there. Look at that wick. It was below.
Yeah.
It was really, really, really dire right here there. That wick, it was
yeah.
So what you want is you want the Swiss franc to get a little weak here, just a little weak. You want it to weaken up, and you want gold to start outperforming the Swiss franc. And if ever this happens, then we're golden. Then you know that gold is outperforming the Swiss franc, which the Swiss franc is probably going to be outperforming the US dollar. And then
it is.
You have the top dog, right? You always want to be in the instrument that's beating the other instrument. It's like you're at a bar, Dale, and you have access to your dream wife. Why are you going to go and leave with the girl that's not your dream wife? It's beyond me, right? Always go with what you want. So
because she doesn't want to get married.
She doesn't want to get, well, if she doesn't want to get married, then you move, she wasn't the girl for you, right?
I was just kidding, man. Yeah. Anyway, Patrick, that's very interesting, the Swiss comparison. You're always interesting, buddy. And you're always looking well beneath the surface of things, and your intermarket relationship work that you and Kevin do is excellent. So people want to get more of you and your work, best way?
Well, guys, it's all free on Twitter, Bat Charts One. But the real in-depth stuff, it's on my website behind a paywall, northstarbatcharts.com. Go check it out there. There's a lot of value there also. But there's a lot to learn, guys. It's every day there. It's a journey. Every day we learn, we share, and hopefully people get an edge out of that there and stop listening to these guys saying it's going to the moon.
Yeah, and Patrick also and Kevin have a great YouTube channel, and they also bring in good guests, and but really interesting work, very long-term in nature, a lot of it, and really helps you see the forest from the trees. So appreciate you being here and sharing with us today, my trading warrior brother.
Thanks. Look at the GSR also is looking dangerous there. Yikes.
Yeah.
Thing. All right.
Yeah.
All right. I'll let you go. I could talk with you all day about this, Ara. So we'll do this another time.
We'll do it in winter. I expect that we'll be singing a different tune, and the markets will be way different by December.
Wow. Can't wait to see how that unfolds. Man?
All right. So thanks, Pat. I say hi to Kevin for me. Follow at the minimum, follow Patrick Karim at Bad Charts One. Go to their website, check out their work. It's eclectic, exotic, and important. So thank you, buddy.
All right. Thanks, man.
All right. So everyone, hope you're having a good day, good week. We'll wrap it tomorrow for TGIF. Have a great rest of the day. And don't just count your pips, count your blessings. Be patient, let things develop and come to you. Adios.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.